Yeah, I can see this. I get it. I'm getting this. It's a lot of information, but I leap over boundaries. Business superhero. I drive, from income statement and I run to the cash flow, but I don't have time. There's a lot of work. There's a lot of work. Like, how you do all this?
You probably know, Pepper. No, you don't have to do this. You're right. You don't have to do this. This is a lot of work and it can require special skills, which is why there are people that you can reach out to help prepare. An accountant, there's a lot of bookkeepers out there, but even if you hire them to prepare your financial statements, that doesn't remove the responsibility of you, for you as a business owner, to review them and actually understand all the components and then be able to manage your finances using those financial statements.
So all you're really saying is I just need to understand them. I don't need to prepare them. I just need to let the cash flow in, let the cash flow out, and use them, the
Correct.
statements.
Unfortunately, there's a lot of people that either own their business, work for businesses, especially large corporations that really don't even understand financial statements, understand the components of a financial statements, or how to interpret them or manage their business. Even if you don't own the business, as a manager within the business, you should understand it because you are in essence helping to manage the finances of the overall organization. You can work for a Fortune 500 company, but you should still understand the financial statements, how to interpret them, and what your role is in the organization to manage those finances.
So this will help me decide like better clients, where to go, what's not working, what is working, right?
Sometimes I think of it like this. Imagine trying to bake a cake and you don't know the difference between whole milk, cream, or 2% milk. Well, if you don't know that there's a total difference between cream and regular whole milk, and you think, oh, I'll bake the cake, I don't have whole milk, but I'll just pour some cream in there instead, how your cake comes out will be totally different. The same thing if you use 2% milk as opposed to whole milk.
That's going to be one nasty cake. I'm telling you, one nasty cake.
Yeah, my point is that when you're looking at your financials, if you've never looked at your financials and you're trying to make business decisions, if you don't understand the different components within your financial statements, how to interpret those numbers, what those numbers really mean, you're not really, so to speak, baking a great cake for your business because you don't understand whether if you're using milk, cream, or 2% milk.
I think I'm getting this. Oh, I think I'm getting this. Oh, I'm so happy. See, I'm superhero. I'm super business hero. What you're saying is all of these statements, the balance sheet, the income statement, and the cash flow, what we're going to go over, is all going to fill in when you start talking about managing the financial house. Is that right? I think I got it, but you let me know. Is that
Exactly.
right?
Now, if you got it, Pepper, I think we can be safe to say that our rest of our audience also probably got it as well.
Because, see, I think that's what you say. You say, hey, and you're going to go over this more in managing the financial house, but these documents and understanding them will tell me, how much cash is coming in, how much cash is going out, what's holding up the cash. Do I got enough,
Great,
right?
Pepper. I think you actually have it. But let's keep going because we still need to finish the rest of the balance sheet. However, we're not going to spend a lot of time on the next couple of sections. We spent more time on the asset section because it's the first part and we wanted to make sure that people really understood. But you can carry the same mentality through the rest of the sections. The next section that we'll talk about is the opposite side of assets, it's your liabilities. So assets or cash represents all the money coming in, all the value that you have in your company. The liability side represents all the debt or all the payments or all the money going out of your organization.
Oh no, that don't sound fun. That don't sound good. That don't sound fun.
You're right, it's probably not as much fun. However, it can be because it means that if you've got to have a business that has some accounts payable, so it can mean that your business is growing. So it's not all bad.
Oh my goodness, oh my goodness. So this is the money, like, 'cause I went and I got a really fast car. I had a slow car. I couldn't move very fast, but then I got a new fast car. Oh, you should see me zoom. But this is all the money I owe for that car, right? And payroll, because I hired one
Yes, you're
guy.
absolutely right, Pepper. It means the money that you owe other people.
Oh,
This
goodness.
section will include accounts payable, payroll, lines of credit, etc.
So do I have to keep a list of all these people, because I got like, the utilities, I got like the people, I got the guy I'm working with to build my
No, you
suits?
don't have to list out all the people you owe. This just actually shows a summary of all the money for those people. You're actually going to keep a list of those people in other documents or other ledgers, as we call them, or other records.
Records. What do you mean records? Like a singing record?
No, not records like music records, but files. In finance, some may call them records, but they're actually financial files.
Oh my goodness, does Motown know we using that name or Capitol Records? Do they know like we using this? Because we can get in trouble.
Pepper, stay focused. Also, keep in mind within this section, you may also have to recognize unearned revenue. And unearned revenue may come into play if you own a business that takes prepayments for products or services. So, say you have a subscription model where you sell subscriptions to a service or a product. Well, if your customers are paying for 12 months, you can't recognize the full 12 months of that subscription revenue. You can only recognize the current months that pass, like 1 month and then the next month and so forth and so on. However, in this area, you really want to connect with a tax consultant that's familiar with your business model. That way, they can give you clear indication of when you can recognize revenue, because if the service or product isn't rendered, that will be funds or finances that needs to go out of your organization, and you can never recognize them as revenue.
Oh my goodness, I think I'm in trouble because the guy gave me money, right? And then so I can't work with him. I can't engage with him. Hey, I meant to do it. I'm going to do
Yes,
it.
you can still work with the people, Pepper, but just understand that if until you recognize or deliver that product or service, you can't recognize the revenue. And that's the only reason that it has to be on your accounts payable. It's still sitting in your checking account. It's still the finances are still credited to you. But as far as your balance sheet is concerned, you can't recognize that revenue.
Okay, because that's good to know because I got his money in my bank account. He's sitting there because I need new tires for my tire because I run so fast, I drive so fast, I walked out the tires. But
Exactly. It'll still be sitting in your bank account, in your checking account. But in all honesty, you may want to actually set that aside just so that you don't spend it. So if something does happen, you don't find yourself in financial challenge because you then have to figure out how to come up with that money to actually pay back whatever that loan or that service is. But again, make sure that you involve a tax accountant that is familiar with your business or your service so they can give you the proper tax advice. Because in this course, we're not giving tax advice, we're just trying to give you a better understanding of how to understand your finances, your financial management, as well as run your business more appropriately.
also, I think I got it. We just need like a team. We almost done yet? We almost done? Because it's good. I gotta
Yes,
go.
Pepper, we're almost done. So let's just do a real quick recap. We went over the asset section, the current assets, long term assets. Then we talked about liabilities. And liabilities can also be broken up into current liabilities as well as long term liabilities. The last section is a pretty small section. It's called the owner's equity or retained earnings. And that's essentially what the value is to the owners. And this can be a little complex, especially the larger types companies where you're selling stock, but it's essentially the value that the owners have in the overall company.
So it'll show if it's positive or
Yes,
negative.
it'll show whether you have a negative balance or a positive balance.
Oh, that's good. But so why they call it a balance sheet? I don't. Why they call it a
That's
balance
actually
sheet?
a really good question, Pepper. The reason we call it a balance sheet is because we have the current assets, long term assets, and then we have a total. However, on the other side, we have current liabilities, long term liabilities, and as part of that is the owner's equity. So, how it balances is that your total assets equals your liabilities, current long-term liabilities, plus your owner's equity. And if it balances, that's why we call it a balance sheet.
Kinda like a seesaw, right? Because if it doesn't balance, it could get ugly.
In fact, Pepper, the reason why it's called a balance sheet is because it absolutely must balance. The one side must totally balance against the other side. Think of it like a scale. On one side of the scale, you have cash, your total assets, plus your long term assets. On the other side of the scale, you have your current liabilities, your long term liabilities, plus your owner's equity. And so both sides must equal one another. And that way, you know that your company is balanced. If it doesn't balance, then we have a problem and we can't close the books, and we've got to figure out why. Maybe we've missed a liability posting somewhere. Maybe we've underestimated owner's equity. But at the end, your total assets section must equal your current liabilities, long-term liabilities, plus your owner's equity.
So that's kind of like a seesaw. Like if you have somebody too heavy on one side, it can totally overthrow the other side. So you have to balance it so it comes out equal. Oh, that's good.
Well, that Pepper, that wraps up our course, understanding the financials.
Oh, I learned so much. This is so helpful. Now I gotta go and do it. I gotta go do it. Oh,
Well,
we got a
great.
next
I'm glad
course.
you learned a lot, Pepper.
Oh, because I know now I'm so excited about the Managing Financial House course. Oh, good day. Okay, talk to you later.
Okay, you take care too. We'll see you in our next course.